Welcome back to the Commercial Real Estate Show. I'm Michael Bull. Today we are talking commercial real estate lending. This segment is brought to you by Xceligent, building data everywhere. You can visit them at xceligent.com. That's Xceligent. Well, my next guest is Bill Fisher. He's CEO and founder of plumlending.com. Bill, thanks for joining us.
Yeah, no, it's great to be here this morning, Michael. I'm looking forward to sharing some thoughts with your audience.
Well, Bill, one of the things I think is on the mind of everyone involved in commercial real estate and maybe everyone involved in the economy in any way is concerned about rising interest rates. So, what do you expect moving forward for rates there? You're CEO of Plum Lending. You spent some time with Wells Fargo before that. What is the outlook?
Yeah, that's a terrific question, and obviously it is a topical interest to every borrowing American today. At Plum Lending, our view is it's going to be driven by, of course, the economic factors that exist in the U.S. economy today. We think you can make a case for the fact that the economy is already at or nearly at full employment. If you look at the unemployment rate itself, that's low. If you look at wage growth, there's actual wage growth. And we think when you take that coupled with what appears to be, a soaring stock market and rumbles of life in the overall GDP, we're expecting that there will be 3 rate hikes this year by the Fed. Now that may seem on the aggressive side, Michael, but at Plum Lending we went back and looked at some of the historicals. If you go back and look at a similar time frame in June of 2004. You'll see that when rates began to rise then, over a 2-year period, the Fed funds rate rose not 1% per year, but 2% per year. It went up 4 points in a 2-year time frame. So if you look at it in that way, we have a kind of moderate view. And all of these are reasons why at Plum Lending we're advising our clients to get into as long a term of fixed rate as possible. And if you're in a transaction now, try to seek out a lender that will lock in your current fixed rate for as long as possible before the loan becomes live.
Well, I think that's great advice. And you mentioned the increases over a 2-year period were 4%, which does seem big today. So what would you guess 2 years from now that we might be paying for a mortgage interest rate-wise for a commercial property in 2 years?
Again, we're expecting 3 rate hikes this year. We think there's plenty of evidence that you would see at least that much in the year 2018. So if you look at stabilized commercial real estate, which is what we focus on at Plum Lending, I think you could easily see rates going as high as 8%, in the next 7 to 8% in the next couple of years, which again is all the more reason to just lock in as long a term fixed rate loan as you can today.
Wow, yeah, that'll be interesting. Well, what about liquidity and underwriting and the availability of financing moving forward, Bill? It seems like some people are concerned that there may be some changes there.
Right, and I think at Plum Lending we have the view that at least in the major markets, the primary markets around the U.S., there's a case to be made that commercial real estate is already approaching the peak of this cycle. If you look at Green Street's Commercial Property Price Index, which is a well-known and well-regarded index, it illustrates that in the private market value for REIT portfolios, those market values have already increased to 26% higher than the previous cycle peak back in August of 2007. You couple that with looking at the Federal Reserve report, which shows that overall commercial real estate debt levels are up 14% from the previous high back in 2007. So all of those are reason, I think, to expect some kind of correction. Wonderfully, that kind of inflation in the markets is not being driven this time around, at least by lax underwriting. Lenders that we work with and that we see in the marketplace, Michael, are continuing to underwrite to actual, not pro forma income. They're underwriting, actual executed tenant leases, not letters of intent. and lenders are continuing to verify borrower liquidity with account statements versus relying just on reported liquidity figures. So there may be a correction coming. If so, we don't think it would be crippling. And I might mention, at least in our view at Plum Lending, Michael, you have a president now who's a former commercial real estate developer. You have a Secretary of Treasury in Mnuchin who made his name trading mortgage bonds at Goldman Sachs. So I think there's reason for everyone to be optimistic about the future of commercial real estate in the next 3 to 4 years.
Well, good. Well, I hope you're right. And I can't let you go, since I have you on the phone today, without asking you about online lending, because it seems like people have gotten more comfortable doing financing for their homes online, but are they ready for it commercially? And how is it going? And what are the benefits of someone considering using Plum Lending, an online source for commercial mortgages?
Right. Terrific question. Of course, there's an overall movement, not just in lending online, but fintech, which is moving technology through wide swaths of the financial service arena. I think everyone can expect to see a real explosion of innovation in the commercial real estate markets using technology, and part of that is driven, Michael, by just the structural forces that drive innovation. I think everyone knows that creativity in general has to be financed. It doesn't pay for itself at the outset. If you look at the pools of capital that have already been aggregated to drive innovation, what do they look for? They look for three things. Number one, they look for a large market. Commercial real estate mortgage market is nearly $4 trillion. They look for an inefficient market. I think everybody who's been involved in a commercial real estate loan transaction would agree it's one of the most complex, inefficient processes known in the lending sphere. And third, the pools of capital look for what kind of industries have been slow to adopt technology. So for all those reasons, I think you can expect to see a real explosion in technology. Plum uses technology to influence the transaction in the favor of the borrower. We believe our technology shows up in the speed we can offer to the borrower. We believe it shows up in the certainty we can offer the borrower of execution. We believe it shows up in the preferential terms. And I might mention, just as an aside, Plum also has an exclusive on technology that's being developed that will help use, again, automation to reduce the time that it takes to do a commercial real estate appraisal from 30 to 45 days, which it is today, all the way down to 5 days.
Wow.
Not ready yet. We believe when we're ready to go to market with that can revolutionize and, frankly, speed up huge parts of the commercial real estate market.
Well, Bill, you can't see me on the phone, but I'm doing the Snoopy dance over here as a broker. I like the idea of 5 days and efficiency in the process. And if you'd like to check out online commercial lending, visit getyourplumloan.com. That's getyourplumloan.com. Bill, thanks for joining us today. We appreciate you being on the show.
Michael, thanks so much for having me.
And thanks for joining us out there on the radio, on the iTunes, on the show website, on YouTube. We appreciate you being with us. And join us next week, because our show is going to be technology for your space. So technology for your office space or your retail space, and maybe even your industrial space. Until next week, be sure that you always lead, learn, and laugh, and join us for the Commercial Real Estate Show. Hey there, thanks for checking out the Commercial Real Estate Show. Don't miss a video of special interest to you. Be sure to subscribe below. And if you appreciate the videos, be sure and thank our sponsors. There's a link to more information about them in the description. For more videos, podcasts, and articles, check out CREshow.com.